right on time. Good to see you guys. So we have got more and more attendees joining in. So thank you all. We appreciate your time. Pratik, Rahul, yep. Just out of curiosity, any one of you can just leave a text message mentioning that we are clearly audible. That would be very much appreciated. Yeah, all right, perfect. Good to know. So, guys, we're just waiting. Let's wait. Still trying to work out the controls, man. Okay, so we can just wait another 2 to 3 minutes, 4 minutes, just for everyone to join in. We've got few attendees now, so it's good to see a good turnover, good show up.
Great start, Bhavesh.
Yep.
Yeah.
I think being time mindful of the time, uh, let's kickstart. So I'll introduce myself. Hello, everyone. My name is Bhavesh. I'm the founder of Jasper Advocacy, and we are a buyer's agency, we're a boutique buyer's agency specializing in properties which are good on short-term rentals, leveraging platforms like Airbnb, Booking.com, and Stays. So we identify properties, opportunities which are good for short-term rental. We'll come to that. Before we kickstart, before we jump on, I would like to say thank you for everyone. We really appreciate your time, your 1 hour that you're going to spend with us over here. I, I'm very confident, I promise, that this is going to be a good value for your time. So let's kickstart. So, yeah, the reason we're here is to showcase you the kind of work we are doing and how we can add a value for anyone watching this. So most investors right now are struggling. Like properties that were supposed to bring in money are actually draining their bank accounts every single month. And tonight we are going to show you a strategy that is more like a solution for the same problem, where your property can actually pay for itself from day one. I'll be sharing why most investors are bleeding cash and why the old way doesn't work anymore and the new way that gives you income and lifestyle. Stick with us because you will see real examples, numbers, strategies, the fundamentals behind it that you can apply immediately, even if you are not working with us. So let's start with the reality check. Interest rates are higher than ever. Looking at the current interest rate, that means most investors are having negative cash flow properties. Traditional long-term rental are returning 3 to 4% at best, and that doesn't cover their mortgage payment if they borrow at 6% interest rate. So what happens? Investors get stuck, they hold on, stressed, hoping for capital growth, but in the meantime, their property is costing them hundreds every single month. So, but here, now that we are here spending time, it's a good news. You don't have to play that game anymore. So, here's the big pain points we hear over and over again talking to number of clients on an everyday basis. One, negative cash flow. So you're putting money aside just to hold on that property every single month. Second, being the tenant disputes. It's not very usual, but talking to a number of investors, we come across this late payments, vacancies, dealing with VCATs, disputes, whatnot. And third, that though you have seen the growth, but growth without the cash flow. So you bought in the right area, you received the good growth, but the property is draining you. And because you're not able to hold it, you are forced to sell it early. So if that sounds familiar, you're not alone. That's 80% of the investors we speak with. And this is exactly why you're here tonight. Now, coming to how, but let's flip the script and what do investors actually want? So we discussed about the pain points, we discussed about if you are resonate with these things we discussed, but let's flip the script. What do investors actually want? So imagine owning a property that pays for itself from day one, owning a holiday home that you and your family can enjoy, but also produce income when you're not using it. And imagine a portfolio that grows in value and puts cash in your pocket every single month. That's what we are really chasing, isn't it? Lifestyle, freedom, and wealth creation. And that's what this strategy unlocks, the Airbnb opportunity. So we have heard about Airbnb left, right, and center from different marketing, but it's a gold mine. It's still very underestimated. So why Airbnb? Because short-term rentals are fundamentally different. We are talking 8 to 12% yields compared to 3 to 4% that you get through long-term traditional renting. Second, you can block the dates for your own use. Treat it as a holiday home. And third, like if the market shifts, things go south, something like COVID happens, you can always flip back to long-term traditional renting. That flexibility to choose between short-term rental and long-term rental is very powerful. Airbnb combines lifestyle, cash flow, and capital growth in one strategy. And that's why so many savvy investors are now considering adding this strategy in their portfolio. So, talking about cash flow, so how it is, why would you consider Airbnb as a strategy? Buying a residential asset, putting it on Airbnb for cash flow, right? So, for cash flow, there are four different strategies as well here in real estate investment here in Australia. Long term rentals, if you find a good deal where your rental payment is more than your interest payment, which is very hard to get, but yields are particularly very low in long term rental and no flexibility. Talking about commercial property, you need $1 million plus to get the kind of cash flow that we are talking about. And banks are very tough and you're exposed to tenant risk. Third is NDIS. Sounds great, but it's compliance heavy and government dependent. Fourth, co-living and rooming housing. It's a great strategy, sure, but if you do it right, it's great. If not, it's very costly strategy. Regulations are heavy and management is a nightmare. Airbnb stands out. It's flexible. So the good part is you are buying a residential asset and getting returns like a commercial one. So your property still appreciates like a normal house, and the cash flow upside is unmatched. Proof this whole strategy and the whole model works, and this isn't a theory. In 2024, Australian Airbnb host earned over $3.5 billion. Dollars. In Tasmania, occupancy rates are consistently 70 to 80%. A property that would give you 450 a week in long-term traditional renting can generate up to 1200 to 1500 a week as a short-term rental if you buy the right property at the right price and have the right team to manage it. And yes, we have tools like AirDNA that let us forecast the occupancy rates with the real data. In a moment, Gary, our head of strategy, will take you behind the curtain to show you how we use the software, find the best properties, and I want you to understand this isn't a hype. It's real, it's data backed, and it's changing portfolios right now. So far, we have covered the pain of traditional investing, how Airbnb could be a solution, the lives for you, the lifestyle and the freedom what we are actually trying to achieve, and why Airbnb can be a great strategy using data and making you an informed decision based on this. But the big question, how do you actually find these deals? Which suburbs, which properties, and how would you know are you overpaying or not? That's where Gary comes in. He's going to show you the exact process and tools we use to uncover these hidden gems, plus some actual client wins that we are really proud of that will surprise you. And after that, Arnab, our finance partner, will show you how to structure your loans so you can borrow smart and scale it more efficiently. Stay with us, the best is yet to come.
Perfect.
Thanks, Bhavesh. All right. Uh, no, that's great. Thanks for the introduction, Bhavesh. So my name is Gary. So I work for Jasper Advocacy. I'm the head of research and the strategy. Now, the Bhavesh has given us concepts. I'm going to talk about how we can achieve these results. So you've seen why short-term rentals are one of the most powerful strategies right now. But what I want to do is let's go a bit deeper and look at how we actually execute this strategy for our clients, how we research, negotiate, deliver properties that generate strong cash flow and long-term growth. Over the next few minutes, I'll show you the exact process we use, the tools behind our decisions, the results across the recent purchases we have made under the Jasper Advocacy banner. So at Jasper, we follow three-pillar approach. So there is a three-pillar framework that guides every single deal. First is research. We analyze over 35 data points per suburb to identify high demand, low vacancy, growth-ready locations. Second is acquisition. We focus on off-market, pre-market, where we can negotiate below market value and create instant equity and win-win for our clients. Third is performance. Once the property is secure, we optimize it for Airbnb performance through furnishing, styling, management setup, and this framework keeps our process consistent and outcomes predictable. Now, we are very data driven. So we use tools like DSR Plus, CoLogic, PropTrack, and ADNA to understand suburb performance, buyer competition, and Airbnb occupancy rate. We cross-check every single deal through overlays, valuation data to ensure it's not just high yield, but also low risk. This is how we avoid guesswork and we make every purchase based on numbers. At Jasper, when we talk about Jasper sweet spot, we looking for properties that tick five boxes. The first one is 8 to 10% gross yield before any Airbnb lift. When I talk about 8 to 10% gross yield, it's compared to long-term rentals. So strong, strong owner-occupier appeal, which protects long-term growth, flexible floor plans for Airbnb or dual income setups, areas with consistent tourism demand and limited competition, and buying below the median price. So there's equity built in from day one. That's where the foundation before even start the purchase. So what we do at Jasper. So at Jasper, we have three core strategies that we do. For SMSF clients, what we do is clean and launch. So we buy near turnkey properties. We furnish them in advance within 2 weeks of settlement, list them on Airbnb within 2 weeks of settlement. This gets a client cash flow positive from almost immediately. Second strategy is renovate and revalue. So what we do is we buy undervalued properties that needs a cosmetic upgrade. Our dedicated renovation team transform these homes to Airbnb appeal. This does two things. One, it increases the valuation because you buy it under the market price or under the bank valuation. So clients can, top up their loan or refinance their loan later on. It creates an equity, and also it creates a highly profitable short-term rental product. The third the third part is development. So what we do is, by adding another dwelling, whether it's under a strata, whether it's subdividing a title or a granny flat. So what we do at Jasper is we buy large blocks. When I say large blocks, anything between 600 onwards to 1,000 square meter or above. So what we do is where we can add another unit at the back, another dwelling at the back. So our architects handle all the due diligence, pre-purchase, covering easements, setbacks, and designing option. This builds equity, set up dual income streams for our investors. So in this case, what we are doing is we are manufacturing equity, keeping the market aside. We manufacturing equity for our clients. Right, next slide. Now, this is what we are very excited to share it with you. Let's take a look what these strategies look like in practice. Here is a snapshot of few purchases that we made recently under Jasper Advocacy. So we made purchases in Tasmania, which is quite exciting at the moment, the way data is stacking up, and in regional Victoria. So in this slide, you will see the purchase price, current valuation, renovation cost, furnishing cost, and projected Airbnb revenue and our resulting yield. So you'll notice the consistency. Every deal has both equity growth and high cash flow. So the first one I'll talk about, we bought this property in Sorel, that's in Tasmania. It's 10 kilometers from Hobart Airport. We bought this for 550. We spent about $45,000 on the renovation. As I mentioned at the start, we've got team on ground. That's the whole value proposition is. So we once we have an open home, we send them for for an inspection. They give us a scope of works. That's how we, before we present it to our investors, that's how we make that's how much it's going to cost on the renovation. So on this one, it costed us $45,000 on the renovation, 15,000 for the furnishing, and once it was achieved, the upfront valuation that came from the bank from CBA, which is your big four, $700,000. And the projected forecast revenue on Airbnb through our data research and through our, being an Airbnb host for 3 years, it's annual income, it's going to be close to $70,000. So that's 11.5% gross yield. Plus, it's, the investor is putting cash into it. They managed to get that cash out by getting the equity out. Second one is this is in again in the same suburb. It's 10 kilometers from Hobart Airport. We bought this property for 815, and what we've done is we've converted the back of the house, which was 6 by 6, 6 by 7, 42 square meter garage. We've converted into a granny flat. So we've spent about $62,000 in converting a garage into a granny flat. That took the valuation of the property to close to 1 mil, and this property is generating $134,000 as a gross revenue um, itself. So you can have 8 people in front of the house and 3 people in the back of the house. So there are two separate listings. So that's 13 plus percent yield. Third one, we bought this property in North Bendigo. This is the dual income potential. So front of the house is rented out to Australia Post, and the back of the house is 2 bedrooms. So it's currently under renovation. We are converting into 3 bedroom. So we bought this property for 485. Valuation is 510. Renovation is about $30,000. Another furnishing 12,000. Forecasted revenue is $65,000, and the yield is sitting at 12.7%. The reason we bought in North Bendigo in this strategy because there's a hospital and the occupancy rate around the hospitals are really good under the Airbnb. Fourth one, this one is our inner suburbs of Melbourne. This is on Bell Street, Preston. We bought this property for 545. The upfront valuation 610. We've done $0 renovation. This is clean turnkey service, and we've added $12,000 furnishing. And in the first year, this property made close to $67,000. Next one is Walker Street. This is again in the same suburb in Sorel. So we bought this property. This was the deceased estate. We bought this property for 526. The upfront valuation of the property was $612,000. Now, this property, the beauty of this property is this is 700 plus square meter land block. So what we're going to do is we're going to lightly renovate the front of the house and put another dwelling in 1 year time at the back, which will take the value of the property close to 1.2 mil. The most recent one we bought in Launceston. This is at Tasman Highway, Waverley. The purchase price is 485. It's currently tenanted till March, 465 per week, which is 5% rental yield. And this is 600 square meter. The long-term plan is once the tenancy finishes, we renovate it lightly and we put it on an Airbnb. Another one is again in the same suburb, Sorel. This is 900 square meter land block. We bought this property for $582,000. The upfront valuation was 612. It'll make $50,000 on Airbnb, close to 75% occupancy, instant equity and positive cash flow from day one. And the beauty of this one, again, we are going to subdivide the title and put another dwelling at the back. Last one, I believe, this is this is in on the eastern shore of Hobart, which is one of the premier suburbs close to Bellreef. This is for $50,000. We are spending about $50,000 on renovation as we speak. The day one valuation was 530, and this is in the premium suburb. It's going to generate more than $60,000 revenue. $80,000 equity upfront, strong cash flow, and we are confident once the renovation is completed, we are going to achieve $600,000 as a bank valuation. So that's the track record for most of our recent purchases. The average value uplift of around 9 to 12%. Airbnb forecast yields close to 8 to 11%. Over $240,000 in total client purchase savings through negotiation. This shows a process. It isn't luck. It's repetitive. So let me go to next slide. So what we do is, let me just, I think I missed a slide here. So what we do at Jasper is, so there are a few mistakes that we see investors make on a daily basis. So they're buying on emotion, not numbers, ignoring the cash flow and ending up negatively geared, focusing only on capital growth with no income, structuring finance with the wrong way so that they can't scale, trying to do it all themselves without a team. That's exactly what we help our clients avoid. Now, let me go to next slide. Our role doesn't stop once the property is bought. So what we do is we coordinate furnishing, styling, connect clients with a trusted management partners, automate bookings, cleaning system, review performance every 6 months. Our goal is just not to help to buy a property; it's to help buy a building, a strong performing asset. So when you look at Jasper Advocacy model as a whole, we give our clients access to off-market deals, in-depth suburb and property analysis, negotiation and equity creation, full Airbnb setup and automation, and advisory support from finance to conveyancing to renovation. It's like a one-stop shop. It's end-to-end solution for our investors who want both cash flow and capital growth. Now, you've seen the process, result, and strategies behind our purchases. Now, the next question is, how do you finance? How do you scale this kind of portfolio? That's where our finance partner, Arnab, he's from Cinch Loan, he comes in the picture. What he's going to do is he's going to break down how to structure your loans for positive cash flow, build under trust structures, and keep borrowing power
Strong
strong
as
as you grow. So over to you, Arnab.
Thank you so much, Gary, and thanks to Bhavesh earlier as well. I don't know. I think you guys are watching them speak, and I'm learning from them. They have given some extraordinary examples on the screen of those properties that they have purchased, and the numbers were really, really lucrative. I think I have to start thinking about that myself for my next investment purposes. Now, I'll probably start with my slides, but a bit of introduction about myself. So my full name is Arnab Baral from Cinch Loans. I've been a finance broker for more than 6 years now. We have got an awesome team behind us. So there are six of us at this point in time. Um, and we are spread across Australia as well. Our clientele exactly similar to my colleagues. They are also spread across Australia, and I have been fortunate to start working with Jasper, which is Bhavesh and Gary of late. And uh, believe me or not, Airbnb has turned the game of lending a lot in last 12 to 18 months. I'm talking about a period where the lenders used to shade a lot of income from Airbnb income perspective, but now they have started, most of the lenders, they have gone up to 80%, which is a significant, significant jump. Now, on the screen, as you can see, there are a few facts over here. Short stay rentals often generate higher weekly rent than long-term tenants, which we all know, right? So if you go into core logic, look into the house that probably Gary and Jasper were showing, they will have their own ongoing weekly rents. But obviously, the moment you put it into that, that burning thing, which is Airbnb, you'll start, growing like anything. So that's called positive cash flow, which means that if you were having that particular property for last 2 years just sitting in normal rent, you will see all the repayments, the rates, the costs, everything gets covered. So first and foremost, what I have seen happening to the clients and whom I am servicing as a finance broker is that their peace of mind is completely different to that of normal investors in the market, right? They think a little differently as well. So their mindset is different because they do know that they are looking at positive cash flow over there. So which is something I personally think an investor should feel. Feeling is very important in the property path, and if you want to create wealth via property as well. Okay. Um, the loan for Airbnb is considered as residential investment loan or business loan. Technically, none at this point in time, Anand. I will get to that in a moment. Okay, so yeah, please hold on to that. I will be there. So just an example on the screen as well. $750,000 coastal townhouse was earning 1,800 a week in the peak Airbnb season, and that actually cleared 1,000 per month even after all the repayments. So that's what is there on the screen. Uh, why cash flow powers a scalable portfolio? Now, whenever there is an Airbnb or short-term rental scenario, one of the critical part is historical data. So that's what I look at, and that's what the banks are going to look at, right? Now let's look at the 2 points on the screen. So cash flow properties can self-fund deposit and holding cost for the next purchase. Okay. Strong serviceability is equal to lenders willing to back your next deal. So that word is very important, which is the next deal. So that basically means that the current property is being funded by Airbnb. So that's an important consideration here. Example, an investor with two negatively geared homes was stuck. So normal rentals. So and he was stuck obviously because of that reason. Adding a high yield Airbnb turned 400 per month into a 900 per month, enabled a third property within a year. So what we are seeing over here is that that particular positive income, there is a shading, but then that positive income is being considered by all tier lenders. I'm talking about NAB, ANZ inclusive, right? So they consider that particular income as long as there is a history to it. Now, that history part varies between one lender to the other. Few people, they can look at 12 months rental, 12 months Airbnb investment coming in consistently. So that's a historical data that they look at, but it depends from one lender to the other. Okay, I'll move on. So this slide is about Airbnb boosting borrowing power. So what we can see is that, just one second. Yeah, so a Melbourne apartment with an annual Airbnb booking for initially assessed at 45K rent. With full history, management records usable, it rose to 72,000, unlocking an extra borrowing of 200,000, which is obviously the extra income because of the uh, Airbnb income. Now, I will try to elaborate a little bit on Anand's question here. That's the reason I wanted it to be part. So, residential investment, Anand, you are partially correct. Few of the borrowing capacity calculators that lenders look at, they do consider it as a residential investment. And that was the trend like almost 3 to 4 years back, right? Where they would also want you to do a tax return on that at least 24 months. So basically two tax returns. They will see that you are paying tax against those income, and then it used to be shaded by 60% as well, right? These days things have changed drastically. Now, example, I will talk about, let's say, ANZ policy or NAP policy or tier one policies. They say that as long as you have that historical data of 12%, the threshold is that we cannot go above 6% of the value of the property. So you can add the income, but it cannot go above 6%. For ANZ, it is 7%, right? There are many other tiered lenders who will consider 80% of that particular income anyway. And that will basically boost the borrowing capacity for your next investment property. So once again, what I'm doing is I'm looking at the history of generating that particular income so that that can be considered in order for you to purchase the next one. So that's the bit of clarity that I want to bring in front of everyone. Okay. All right. Next slide. So funding your property journey. So now let's consider. So in this slide, what I put in is you can have investment property under your individual name, but you can also have it under family trust or SMSF. So two examples on the screen. One was a regional Victoria Airbnb property, which actually had plus 15K yearly cash flow. Now, because that property was under family trust, the couple could actually help reduce their taxation. As we know, right, in trust, you can actually distribute the income towards the person who is earning less, and that's how you can reduce the tax. Okay, and you at the same time you have got asset protection, keeping your personal assets separate. So that's family trust scenario. Under SMSF, yeah, that's your hard-earned money, right? So if you have a property under SMSF, imagine if you can boost that particular income using Airbnb. How good is that, right? So 7 years, if you can have that kind of an income within 7 years, there is a possibility you pay off that loan. If you have got offset facility under that particular self-managed super fund, you use that particular amount as deposit. So you are basically reducing your principal because you have got offset facility under SMSF. There are a few lenders who does that. And at the same time, you are increasing your cash flow, say cash flow deposit, and then you pay off that loan and you are ready to purchase another one under self-managed super fund again. So Airbnb is becoming really, really important in such scenarios to consider. Okay. Next slide from here is, so this is where I try to make this a little more generic, where I have seen, like I've got in my panel with the number of lenders that I work, I can tell you there are more than 22 lenders who are supporting short-term rentals and Airbnb. They are considering their income, and almost 70% of them are bent towards that 80% consideration, meaning they will shade only 20% of the Airbnb income, historic income that you show it as an evidence, right? So that's that. So that's the reason you see many banks now accept Airbnb income if you show 12-month history and correct evidence. Okay. Well-prepared files get better borrowing limits, smoother approval, and faster equity growth. And so that's my job. That's what I do, right? I try my best to strategize with each and every client based on their needs, right? So, and sometimes I take help from Gary and Anand because, sorry, Gary and Bhavesh, because they come in where people are stuck. So, we work as a team, and we can then nurture clients in between us as well, to make the strategy better for their future. One example, one client doubled usable rent for finance after preparing proper Airbnb statements. Approval came without needing any extra cash buffer. How good is that, right? So it's all about how you strategize, how you put down the case in front of the lender and get the pre-approval done for your next investment property. Okay. um, few of the other stuffs that I wanted to touch base upon, which is not there in this particular slide. I think this is the last slide here. Um, there are a few lenders who also still go by the previous rule books, which basically means that they will want you to do at least one tax return. So they need that 12 months history. At the same time, they want you to do the full financial year tax return in order to show that evidence that you are generating that income. So that again varies from one lender. You have to show that it is current. So whenever you are trying to apply for a loan, what the banks always see is history, present, and consistency, meaning future, that this income is going to come. So that's an important job for me to establish on behalf of you to the bank so that you can get the loan done. If it is less than 12 months, few of the lenders, they do not want you to analyze it, right? In such scenarios, you just tell them that this is the bank statements, this is where the income is getting generated, this is the kind of trend, and we might even ask for we can even ask for some expert advice or links or data to support that this continuity will be there for future as well. Okay. um, Expect a haircut. So, which basically means expect a shading all the time. There will be shading, but as I said, I am optimistic about the fact that most of the lenders have gone towards the 80% rather than staying at 60%. Most of the lenders are looking at it as a proper investment income rather than like just based on the shading part, right? So that is another important thing for you to consider. Okay. um, the second part that I wanted to touch upon is the policies of banks keeps on changing, but because of the trend that Airbnb is currently on, that's the reason most of the banks are becoming favorable because they really want you to purchase more and more properties as well, right? They're trying to help you that way. Um, Now, going back to the strategy part, which is the discussions with the clients, the ongoing nurturing and everything, I think it's important that you have the right people on the table or onboarded for you to do the jobs. For example, you have the right Airbnb consultants and you have the right finance broker. And you also have to allow them to do their job and trust them with whatever they're going to do for you, right? Because of the knowledge and everything that we are doing. Uh, I will probably thank everyone today for joining us, and I can see that the chat window is like burning at the moment. I hope Gary and Bhavesh, you have covered everything over there because I was not paying much of an attention over there, but I'm more than happy to answer any queries, question which is related to this specific topic offline as well. So please feel free to reach out to me and obviously Gary and Bhavesh as well with all your questions. And I will be taking a look at this particular chat history later on and try my best to reach out to you guys. Anand again, are you guys, I'm just reading at the last one, are you guys helping the existing investment property into Airbnb? The answer is definitely yes. Sorry, Gary and Bhavesh, I'm answering on behalf of you guys. You are on mute, but the answer is definitely an yes. Yeah. All right. Okay. All right, guys. Thank you. Thank you so much. I'll probably go on mute as well. And
Yep. No, thanks, Arnab. We have another 10 minutes. If there's any question, please put through in the chat, and we're more than happy to answer. Regarding Anand's question, yes, definitely, most definitely, Anand. We are bias advocate. We buy. We assist our investors buying investment properties. But yes, we can definitely you can book a call, and we can we can do a report for you without any cost, and we can have 15 minutes call. We can just give you overview how will your property perform if you put it on Airbnb. Hope that helps. Another shout, if you have any question, then here, okay, there's another one from Gorak. How do you determine the under market or instant equity? That's exactly right. RP data or core logic is what we use. How so what we do is, Gorak, when we look at any property, I don't look at what's the asking prices. What I do is I check at what's the bank valuation says. So it's give us a range. Let's say if the property gives us a range from 550 to 600, that's where we start a negotiation. And if that doesn't fit within that negotiation bracket, we just pass on and we move on to the next property. Absolutely, Harry. That's the beauty of it. The fundamentals remain same. So the question is from Harry: do we have the option to buy in any state? Yes, yes. So we are working all across Australia, but at the moment, as an investor, myself, and as a strategist or as a bias advocate, if I have to place my bets, we are heavily targeting Tasmania and regional Victoria, and there are multiple reasons. One of the reason is because the entry point in Tasmania is really good. You can buy a good asset within a range of 600 to $700,000. And Hobart is the last capital city in Australia where you can actually afford a $600,000 property within 20 to 25 minutes of CBD. Loving the questions. Please keep them coming. If there are any more, would love to have a crack at it.
I just wanted to take this opportunity to answer one of Gorak's previous question. He mentioned that immediately after settlement, if I can take equity out, definitely the answer is yes. Technically, that's possible, but what will normally happen is you have to go for the valuation process once again. Obviously, not with the same bank. I can't imagine that any bank will allow you to go ahead with a valuation immediately after settlement. So it has to be some other banks. But as long as the valuation stacks up and we are looking at 80% LVR. So technically, yes, that's possible. Just thought of elaborating on that.
Another good question from Harry. Are the properties managed by you guys? So there are two options, Harry. One, we empower you. If you have time and if your life allows, we can teach you, or we can give you the tools that we use. You can manage the property by yourself. The second option is we have our trusted partners. So what we do is we link you up with the trusted management company who manage 100 plus properties in the state. Uh, so what we do is, Harry, we do the strategy part. We are the think tank, and once we do the strategy part, we hand it over to the management company for day-to-day business, manage day-to-day operations of the property. So yes, we link you up with the trusted management property.
And just to emphasize on Mr. P's point about the returns, the revenue, are they before the expense or after the expenses? So you might have the same question as well, just to emphasize on that. So we look at properties where we can get 10 to 12% gross revenue based on the data. After all the expenses, your booking channel fee, your management fee, cleaning fee, your notices, rates, whatnot, everything, as an investor, you're left with 7 to 9% return. Just to give you a numbers perspective to it, let's just say we buy a property for $700,000. Okay, let's take a step back. We look at the property on our report. If we can determine it can give up to $70,000 revenue through Airbnb in 1 year, based on the live Airbnb listings in the same area, we reverse engineer the price. If we are able to buy the same property between 650 to 700, we give it a shot. If not, we give it a pass. I hope it answers your question, or any of the people here might have the same concern.
Last shout. If you have any more question for Arnav or for myself or for Bhavesh, please please ask.
Well, if no question, Viv Bishnoi, thanks. Thank you, Viv. Appreciate it.
Harry, what is the square meter area roughly? It depends. Again, as we mentioned, there are three different strategy: turnkey services, or we can buy a property where we can renovate the property, and we can buy a property where we can add another dwelling. So it depends what's available in the market at the time when you are there for an investment. But yes, for second dwelling, we can subdivide the title close to 350 square meter block. Yes, Anand, that's an option. But I believe from my experience, if you rent and it also depends, Anand, where are you buying? So, for example, if you're having this property, 4 bedroom house in Tasmania, I wouldn't, rent the room individually. I would rather give it to a family who's traveling, because in Tassie there are mostly tourism customers. People are traveling for family holidays, etc. But yes, if you're in a dense populated suburb, for example, a property that I have one property in inner suburbs of Melbourne, in Preston. Yes, if you have 4 bedroom, you can put it on put it as separate room. That's an option. All right, guys. Thank you very much. Thanks for spending your evening with us. Really appreciate it. What we will do is we'll send you an email after this session. Really appreciate your time. You'll get an email and you'll get a copy of a copy of the recording of the webinar, and you have our details. You'll get a Calendly link as well. So anytime you have any questions, book a call, 15 minutes discovery call, or a strategy session with us. Thanks very much, and thank you, Bhavesh and
Thank
Thank
you.
you all.
And
Thank you all.
we got another question as well. Thank you for all the answers. Thanks, Anand. Thank you. We discussed everything in a very much detailed manner. If you feel that you are on the market to buy your next investment property, and also what we are here to offer can benefit you, happy to jump on a quick call, see where you're coming from, and collaborate if we can. Thanks everyone. Thanks for your time.
End session.